Let's find out what Martin Crabb from Shaw Partners makes of it all. He's joining us live in studio here for our weekly catch-up Barangaroo. Hey Martin, welcome to the program.
Good to be here.
How did you read that statement from the RBA from a market's perspective?
Dovish, yeah, clearly dovish. So they inserted, the last sentence of the statement I think was saying they continue to evaluate other ways to provide further monetary stimulus as the economy opens up. And they just kept saying the word jobs over and over. Jobs, 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 jobs. In fact, if they had a statement that just said jobs, that was pretty
I think
much
that
it.
was the Team Australia moment.
Absolutely.
It was just backing
Forget
up.
about inflation.
Yeah.
There's no inflation. Let's just go hard for jobs. Yeah.
Okay.
It was really noticeable that the bank actually acknowledged that wage and inflationary pressures are very weak.
Yeah.
And then said, we're going to be releasing forecasts next month. So
Yeah.
it came across to me as like, priming the market. And you're right, to say that in jobs is a national employment to get unemployment lower is pretty punchy language. Let's go and get to our budget. We're about 3.5 hours away. I'm getting pretty excited about it. Chomping on a bit. What are you looking for in that particular document from a market's perspective?
Spending. So obviously infrastructure is great, nation building, etc., but the multiplier effect is very low, and the time it takes to get these projects is years, right? So how do they pump prime it short term? They've got to give people cash. Even tax cuts, we've got to wait till next year to get them, even if they backdate them. So they've got to announce spending measures, I think. So they've indicated that they're going to be aimed at younger people, we'll say under 35. So they think there's enough stimulus out there for older people. The good thing about that demographic is that marginal propensity to consume is over 100, as far as I can tell. I've got a 27-year-old son and a 25-year-old daughter. They spend more than $1 of income. Whether it's buy now, pay later, credit cards or whatever, you give those people money, it's going to get straight into the economy. You give it to, to older people and they're going to save it. In fact, so much of the stimulus around the world has been saved. National saving rates are through the roof because people have lost their jobs or they're furloughed and they're worried. So the money that's coming in, they're just sticking in the bank or they're paying off their credit card. So the government's challenge is, how do I get people to spend? Give it to people who are going to spend, younger people.
And that's potentially why we are considering another early release of super, $33.8 billion worth of COVID-19 early release scheme payments have gone out already. I mean, that's a massive amount of money.
Yeah, I'm not a fan of it, to be honest. I mean, I think the thing's set up for longer term savings. And $1 invested at 20, by the time you reach retirement age, is $10 or something. So it's kind of robbing your future a bit. But I understand why they're doing it. But it's like, come on, guys, with interest rates this low and the Reserve Bank this accommodative, borrow the money from the markets at 0.25 and put that in the economy. Don't raid 50, 60 billion of people's super. It doesn't make a lot of policy sense.
I feel like you've had
me.
this conversation with your 25 and 27-year-old already, Martin.
Yeah.
Okay, but that means when you look at the makeup of the equity market here in Australia, I mean, how do you think we'll be sitting post-budget 2020 when you look at the banks, the discretionary retailers, those areas of the market?
Yeah, I mean, things like super retail and anything to do with sort of outdoor furnishings, all that sort of stuff, that's work from home, stay at home sector is going to continue to do well because there's another wave of consumption coming through. So you buy now, pay laters. Anyone who's involved in credit, and that's from the major banks all the way through to the payday lenders, basically there's another delay in terms of worrying about kicking the debt down the road. So we had a discussion this morning about the banks. They're factoring in $3 to $3.5 billion each in bad and doubtful debts at the moment. If we roll that forward and halve it, the stocks are on 8-9 times earnings with 7% yields. So that's not going to persist. If those numbers are right and bad and doubtful debts are half of what they are this year, next year, because the economy improves, then those stocks look incredibly cheap.
Jobs, jobs and jobs, as the Treasurer was saying overnight. Let's go and talk about the M&A story of the day. Super Tuesday, we're going to have the super pin in Kalgoorlie is going to have one sole owner if all things go to plan. What do you make of the Northern Star Saracen tie-up?
Yeah, look, as soon as the deal was announced, it was like, this is going to be good. It might be 2 or 3% good. It's ended up being 10 or 15% good. So if you look at the market cap change from yesterday's close to today's close, when I came down here it was 1.8 billion. So that's a big amount of value accretion from just putting two pretty boring dirt mining companies together. So the company said on the call that they figured the synergy benefits were $1.5 billion pre-tax. So we've added 1.8 post-tax. So we've almost doubled the amount of value accretion, and that's value accretion is going to happen over a decade or longer. The market's happy to pay for it today because they can see the common sense of the deal. It makes sense. It reduces their fixed cost structure. They amortise it over more ounces. They've got 3 hubs. They're talking about Kalgoorlie, Yandell Belt and Alaska as these 3 hubs, and they've all got exploration and development upside. So it's turned what was probably a couple of growth companies into one big growth company. So obviously positive momentum towards gold that we're seeing more broadly, and obviously it's just supercharged those stocks today.
And everyone's saying more M&A in the gold space is possible,
Yeah,
is likely
absolutely.
here in Australia.
Yeah. Well, bigger is better. So the interesting, thing that also happened today was Newcrest have applied successfully to go on the Toronto Stock Exchange, because Toronto investors or North American investors put higher values on gold stocks than Aussies do. So this is like this value arbitrage. So, I mean, this creates the super pit super merger. Northern Star was already the second largest, but now it makes it a lot closer to Newcrest in terms of size. Maybe that's the next logical step for them as well, is to expand their listing, because there's only a handful of super large gold miners in the world, and most investors don't want to muck around in mid caps. If they're taking a view on gold globally, they'll buy a Barrick or a Newcrest or something like that. So the bigger you are, the better.
Just a question, this is my ignorance. So do Australian shareholders benefit when these companies do take a dual listing out in any way?
Yeah, as long as the multiple of the market, I mean, it's a little bit silly. Why would an investor in one part of the world pay a different price than an asset in someone else? But it's just naturally how they look at things. For some reason, North American investors are paying more for gold stocks on a per ounce or per value basis.
So there's no negative or direct positive for if you're already an existing shareholder in these companies?
Yeah. Well, and one of the great value arbitrage stories was the fund managers in Australia listing in the US.
Yeah.
Bad move, because then US investors pay a lot less for fund managers than Aussie ones do. Because Aussies are like, they're captive, there's superannuation. Janus Henderson was valued at 12, 15 times earnings in Australia. It went to America, it's valued on 6 or 7 times. So it depends on the market, yeah.
Now there's an investment lesson for the day. Martin, let's go and get ideas. We've seen the New South Wales state government is telling us to go get the public servants back to work. We're seeing new car sales going through the roof. We're seeing used car sales nuts at the moment. People are starting to go and drive, but they're not willing to get on public transport.
Yeah.
How can you play that thematic moving forward?
There's a number of ways to do it. I mean, you can buy auto retailers, but they're going to get a one-off bump as people go, well, I'm not catching the bus, as you said, not catching the bus ever again, because they're just petri dishes. I'll just stay in my own car. So there's this one-off shift towards people who were catching public transport to driving car. So you can buy the car sales and you can buy the auto sellers and these kind of guys, even motorcycle holdings, people are buying bikes, etc. Yeah. That's a one-off. I think longer term you buy toll roads because they're going to have more cars on them. So I think a very safe way, if I can use that term, to play the recovery is something like Transurban. We know they're very dependent on Victoria because that's where their biggest assets are. And they're obviously getting belted by what's going on there, but that's going to reopen. The other thing about them is they're an inflation hedge because the tolls are linked to the higher of inflation, or 3% or 5% depending on the concession. So if there is ever any inflation, you want to own those assets. One of the reasons the big pension funds like UniSuper own huge amounts of toll roads is that gives them that inflation hedge. So you've got the shift in consumption towards more cars on the road. You've got the lockdown in Victoria coming down. You've got a recovery in their distributions. They'll get back up to 60 cents in a couple of years. The last time they were paying 60 cents, the stock was sort of $3 higher than it is today. So it's not like it has to grow a heck of a lot. It just has to get back to where it was. So people are happy to pay up for Flight Centres, Qantas, Sydney, where there's a lot more uncertainty around international travel. We just don't know when that's going to recover. Whereas with the toll road, you kind of go, well, as long as offices are open and people are getting back to work and there's more cars on the road, they'll do quite well. So I think they're quite a good way to play it.
Okay, interesting one. So we are waiting for the budget 2020. Mm-hmm. What do you make of Donald Trump and his appearance on the balcony, and now the uncertainty around the U.S. presidential debate and everything that's to come? I mean, when you're in your morning meeting, how do you read this? I mean,
a lot of it's noise, right? So him getting the coronavirus is like, everyone just thought it was incredibly ironic that he would get the coronavirus. And the markets seemed to be nervous about it going into the weekend. And then we had that sort of half-day trading almost. Yeah. Not a lot of volume yesterday, but a huge bounce because Trump had been seen in his car and his doctor said he was doing well. So was the market discounted on Friday because he was sick and then recovered yesterday because he wasn't? I'm not sure. It's very hard to read too much into this. What we do know is Biden is 14 points ahead in the poll now. So investors are starting to think what the blue wave looks like. So we get Biden in the White House, and the Democrats win enough seats to get both houses, and they can get stuff done. And obviously, yes, they're going to increase taxes, and everyone's worried about that, but their spending packages are quite substantial. So they're willing to go a lot more aggressive in terms of spending money, which would be good for the market. So everyone's kind of going, well, if Trump's gone, which the polls suggest he is, then maybe we can start thinking about a clean sweep. So, but it's very difficult. The reason the volatility curve is so elevated in November is this is still a bit of a lottery, this election. It
seems so. Donald Trump saying that he feels 20 years younger after with the virus. So the drugs he's on must be pretty special at the moment. So he's going to need all that energy to go and fight back against the polls. So one to go and keep an eye on. Less than a month away. I cannot believe how quickly this year is going. Martin Crabb from Shaw and Partners. Always fantastic to go and chat on Tuesday.
Good to be here. Thank you.
Thank you.